When will the bleeding finally stop? In this video, we're diving deep into the market correction we're currently facing, what triggered it, why it's happening, what needs to change, and most importantly, when we can expect a turnaround. But that's not all. Stick around until the end because I'll be sharing something fascinating about the unresolved Ripple versus SEC case. I've shared my theories before on why this case is dragging on compared to others, but I've uncovered an intriguing piece of documentation that's flown under the radar. It sheds light on why this case is different, and trust me, the news is incredibly exciting. Don't miss it. I've been trading crypto successfully for over 380 days, consistently closing every month in profit. In the last 90 days alone, my followers have earned over $29,000 in profits by copying my trades. Want to see my verified stats? Click the first link in the profile description and start copying my trades for free today. Hey everyone, let's kick off this video with something really fascinating. It's a powerful way to visualize what's happening with the total supply of XRP right now. We're still in the early days of the XRP ledger, a fact that often gets overlooked. But here's the thing, I truly believe that one day, the majority of XRP out there will be completely locked up. XRP is emerging as the ultimate source of pristine liquidity. The future of the XRP ledger is all about XRP itself serving as the backbone of liquidity for the entire network. In the past, Ripple utilized XRP primarily as a payments token, particularly in their ODL product. But when you dig deeper, what XRP truly does in ODL is act as a liquidity bridge, seamlessly connecting currencies. Looking ahead, XRP's role isn't about being just a payments token. Its future lies in becoming pristine collateral and a liquidity powerhouse for the entire XRP ledger network, and potentially for much of the financial system. Now, let's dive into what XRP's current tokenomics look like. I came across a fascinating report by SBI, one of Japan's leading banking institutions. They've laid out a detailed breakdown of XRP's tokenomics today, and it's clear that major changes are on the horizon. Let's explore how this evolution could reshape the financial landscape. Check this out. Right here in the gray section, we've got the total amount of XRP that's been burned, completely erased from existence. But honestly, I think this number is much bigger. Why? Because there are probably tons of people out there who've lost their XRP keys, meaning that XRP is gone forever. Poof. Now, over in green, we've got the circulating supply of XRP. This is the XRP people are holding, trading, and using daily. Basically, it's all the XRP actively moving around in the ecosystem. Then, in the blue section, we see how much XRP Ripple holds as a company. And finally, in yellow, we have the total XRP locked away in escrow. Pretty fascinating to see how it all breaks down, right? But what's really exciting is how these numbers might shift in the future. Here's my take. I think the amount of XRP lost or burned will explode over time. Over the next decade or so, we could see 25% of the total 100 billion XRP either burned or lost forever. That's some serious deflation, and it could make the XRP you and I hold way more valuable. So, word of advice, don't lose your XRP keys. On the flip side, the circulating supply is bound to grow. As Ripple releases more XRP from escrow, there'll be a lot more XRP in play. The landscape is changing, and it's going to be one wild ride. Many people mistakenly label this as inflation, but that's not the case at all. Here's the deal. More XRP is becoming available, but inflation means creating more of an asset. That's not happening here. The total supply of XRP is fixed at 100 billion, and it's actually shrinking as XRP gets burned out of the ecosystem over time. What's really going on with Ripple's escrow? It's simply redistributing XRP to those who want to hold and use it. This isn't about flooding the market and dragging down XRP's price. It's about putting the asset into the hands of people who genuinely need it. It's a shift, not inflation, and a step toward making XRP more accessible. The game changer moving forward is how the circulating supply of XRP is evolving. Early signs in the XRP DeFi space already show millions of XRP being locked up on the XRP ledger. And this is just the beginning. As more advanced products emerge, think tokenization, true stablecoins, and innovative DeFi tools, we're going to see even more XRP pooled as liquidity. But here's the exciting part. This locked XRP doesn't just sit idle. It powers the network, creating liquidity that fuels connections between various issued assets on the ledger. XRP becomes the bridge, the glue holding everything together. With this growing demand for liquidity, it's clear that more and more XRP will be locked away, shaping the future of the ecosystem. If you need liquidity, be ready to pay a premium for it. It's fascinating to think about how this dynamic is evolving and what it means for the future. I believe we're on the verge of seeing this gray area expand massively. Picture this, a new red zone emerging, with hundreds of millions, even billions of XRP locked up specifically for liquidity. At the same time, a significant portion of Ripple's escrow could shift into their holdings, positioning Ripple as the leading liquidity provider for the traditional financial system. It's an exciting concept, one that will be incredible to revisit years from now when we see how much XRP is locked up 5 or 10 years down the line. But let's shift gears, because we can't ignore the looming market crash that's on everyone's radar. Here's the kicker. One of the most intriguing things I'm watching right now is the strange CME gap with Bitcoin. Historically, Bitcoin has a knack for following this pattern, and it's something we'll want to keep a close eye on in the coming days. 80% of CME gaps are filled by Bitcoin, and no one really knows why. It's one of those quirks of the market that defies explanation. Yet here we are, watching Bitcoin drop to fill the CME gap once again. To me, this feels less like some deep fundamental reason and more like a technical play, maybe even a classic whale strategy. The fundamentals? They've never been stronger. Look at the reasons being thrown around for this dip. The ongoing war, inflation, tariffs. Honestly, none of these explanations hold up. In fact, crypto was designed to solve many of these issues. So why the crash? The logical answer seems to be the CME gap. It's the one thing that makes sense here. If you're worried this signals the end of the bull market, take a step back. This feels like a technical blip, not a death knell. Back in 2017, Bitcoin faced corrections of 41%, 38%, 29%, 34%, 41%, 40%, and 27%. Big swings, right? Yet these corrections didn't stop the bull market. Fast forward to 2021, we saw drops of 20%, 17%, 31%, 26%, 55%, and 25%. Scary? Maybe. But here's the reality. These dips are a normal part of the crypto ride. Yes, the volatility can feel overwhelming. Prices move quickly, and it's easy to get caught up in the chaos. But let me remind you, none of this is out of the ordinary. Now, let's talk about XRP. It's holding strong, and it's fascinating to watch. Earlier today, Dom shared a compelling post highlighting the sheer volume of bids XRP received at the $2 mark. Right now, support for XRP at these prices is surging. Here's the kicker. XRP has managed to stay above $2, even as Bitcoin dropped 20% in just a week. Impressive, right? While much of the market is down 50% from its highs, XRP is proving its resilience. According to Dom's analysis, breaking the current downtrend would mean XRP needs to hit $2.20, and I couldn't agree more. Stay tuned, because this is one to watch. We could be looking at a classic V-shaped recovery here, signaling an impressive bounce back. While we're not quite there yet, the surge of bids at the $2 mark is a promising sign as XRP fiercely holds its ground. As Dom pointed out, XRP is maintaining these higher levels beautifully. Check out this price chart. XRP hasn't dropped back or broken through this critical upper range. Now, compare this to Bitcoin. When we looked at those CME gaps, Bitcoin completely lost traction at its higher level, crashing sharply and wiping out most of the gains it had locked in since Trump took office. XRP, however, is writing a very different story. It's not just holding steady, it's standing strong, defying the odds. This is something you don't see every day. XRP is trading in a way I've never witnessed before, and it's incredibly bullish. It reinforces the narrative that demand for XRP is skyrocketing. The massive whale accumulation we're seeing is building rock-solid support levels that could sustain XRP well into the future. This isn't just about people speculating because Bitcoin had a big run, and now they want to chase extra gains with XRP. No! This is about serious investors accumulating the token itself and creating a strong foundation. What's likely to happen next? We could see Bitcoin dip one more time to close that CME gap, which might cause a quick flash crash for XRP. But overall, I'm feeling confident that XRP will hold its current levels. The strength we're seeing is undeniable and exciting for the long-term outlook. Before wrapping up, let's dive into why the Ripple versus SEC case is still unresolved, and what it could mean for XRP going forward. People keep saying, this is nonsense. Other cases are wrapping up, so why isn't the Ripple SEC case? But here's the thing, I've said it over and over on this channel. The Ripple SEC case isn't your standard lawsuit. It's way more complex. Today, I want to share something fascinating from the Crypto Task Force. I've been saying for a while now that I don't expect this case to end with a simple dismissal. Instead, I believe it's heading toward a settlement. Why? Because the issues at play here are massive and need careful resolution. Check this out. This document from the Crypto Task Force makes an interesting point. It notes that while the SEC may not agree with Ripple, the case represents the only current post-mortem dismissal ruling on the topic. The document even suggests the SEC should issue an interpretive release adopting Ripple's secondary market reasoning. Now that's something to think about. This is absolutely fascinating. Let me switch back to the other view for a moment because we need to unpack what this really means. Essentially, they're saying the Ripple SEC case is so groundbreaking and influential that it can't just be brushed aside. Instead, it's shaping the foundation for future policy. The decision is that monumental. It seems we're on the verge of a Ripple test, a concept that's been floating around for ages. Ripple, through this case, may have laid the groundwork for future legislation, solidifying that digital assets aren't securities. To me, this explains why the Ripple SEC case has been dragging on for so long. It's simply too impactful to rush. As I've been saying on the channel, this ruling is a game changer. It's not just about Ripple and XRP. It's about setting the stage for clarity across the entire crypto market. The SEC isn't going to brush this off or ignore it. Instead, they're using it as a foundation to craft a settlement that benefits Ripple, XRP, and likely the broader industry. This is incredibly bullish news. For weeks, I've been predicting this exact scenario, and now, the Crypto Task Force seems to agree. They view this ruling as a pivotal moment for shaping future legislation and bringing much-needed clarity to the cryptocurrency space. The best part? We didn't even need to take this all the way to the Supreme Court. This decision alone has provided Ripple and XRP with the clarity they've been fighting for. And here's the kicker. The SEC isn't throwing this work away. They're adopting it, building on it, and using it as the benchmark for the future. Big things are coming, folks. Thanks for tuning in, and I hope you found this update as exciting as I did. Stay tuned.